Welcome to the Startup Growth Podcast. Today, I am joined by repeat founder and investor and board member Harsh Patel. He's built multiple companies. He's sold multiple companies, including MakerSquare, Hack Reactor, and Galvanize, which had a $165 million exit. Harsh has seen it all. We're going to deep dive into going from 0 to 1, scaling fast, finding product market fit, and the future of crypto and AI. Speaking of the future of crypto and AI, before we jump in, I want to give a quick shout out to Fondo. This is my company. We're the #1 accounting platform for startups. We handle bookkeeping, taxes, and tax credits so founders can focus on growing their business. If you're a startup and need help with this coming tax season, check us out at tryfondo.com. Now let's get into it. All right, welcome, Harsh. Let's just jump into it.
Let's do it. I think when you were telling me that, there was like 3 companies that come to mind right now, and the 0 to 1 from each. Growth. I feel like growth at scale is like, the hardest thing is product market fit. Once you get product market fit, like, there's probably a textbook out there for how to grow.
Mm-hmm.
But like the nothing to product market fit is like that's the hardest thing.
That's the hardest thing. And
yeah,
when you started MakerSquare, what was the journey to like getting your first customer?
I don't know if you remember this at the time. I mean, you might. Quora. There was a Quora post that was like the sticky post on like, what are the different coding schools in the country? And the reason I discovered it was because I wanted to be a student of a coding school. And so like, I was the ideal customer profile. And so I knew exactly what I cared about, where people like me hung out, like Hacker News, Quora, like, and so, when we said, oh, there's no coding school in Austin, and Austin is like a really up and coming, growing tech hub at the time. Should we build one there? We put up that we were, we just updated that Quora post. And that got us some early folks, maybe like the first, I don't know, 1 or 2 enrollments, if you will.
Yeah.
Or I should say applications at first. But that was enough for us to be like, oh shit, like, let's go.
This is going to be huge.
Yeah, exactly. But a funny story I can tell you about that though at the time is, I'll put a pin in this, but I had no idea what the hell. I didn't know you could sell a school, like M&A wise. And so like, I didn't even walk into it being like, this is going to be a great company. I was just like, this is going to be a cool school. But that's another story. But yeah, so like the first couple of people we got from like,
interesting.
Yeah, the first couple of people we got from just like that Quora post, but that was enough for us to like.
Was yours the sticky one at top that you had created?
No, someone else's was. No. Someone else's was.
So you could
like propose
those.
Edits.
You could propose edits. Okay.
Yeah.
Is it still like that?
I haven't been on it in a minute.
I know. No one uses Quora anymore.
Paywalled it's so paywalled.
Yeah. It's like become the kind of, it's become something else.
Yeah. I see my dad on it all the time, so I know it's not my place anymore.
It's Yahoo Answers now.
Yeah.
And before that, you built Portfolio, right? That was like your first startup.
That was the first like internet startup.
Yeah. And what was
my first startup was in 2nd grade.
Oh wow, what's that? Let's go back to the origin story.
I only know it as the origin story now because it's easier to connect the dots going back on like, I didn't have the identity of being like an entrepreneur.
Yeah.
Until, just a few years ago. But once I was like, oh yeah, that's what I do. And enough people told me like, yeah, that's what you do. I was like, oh shit. Like, let's think back to when it first started. And the earliest I can think of is 2nd grade. Me and my buddy, John, on the school bus we'd draw Nike swooshes. And then we'd tape them to our sneakers because we were all like, this is like Central Illinois. So everybody's poor.
Uh-huh.
And no one has Nikes, but everybody wants Nikes because it's like the Michael Jordan era. And so we would slap Nike swooshes on our shoes and just, act like it was cool. And we'd sell them for $0.25. to everybody
Wow.
else. And so we just collected a bunch of quarters, making Nike swooshes and selling them to kids on the
Wow.
bus.
Product market fit in second grade.
Yeah, dude.
Wow. And is this
TAM
Sean?
was the
This
TAM
is,
was pretty low.
but you saturated that market, and you and
Real
Sean worked
fast.
together. Is this the same Sean I
This
know?
different Sean.
Different
No,
Sean.
no, no,
Okay.
different Sean. Yeah. Man, I haven't even kept in touch with him. It's like, elementary school. Uh,
Is he a
haven't talked to.
founder now
He
too?
probably doesn't even know that I've ever thought about him again, but I have many times.
Oh man, that's so cool. And then how about growing up beyond that? Like, did you have, any other sort of startups?
Oh, for sure. So after that one was middle school, I'd go to Sam's Club with my mom every week, and I'd pick up. Go to the candy aisle. There's like just massive, massive bulk candy. I bought sweet tarts, like chewable sweet tarts, and like those little rolls.
Yep.
And it was like, I don't know, super cheap. In hindsight, like I wasn't even paying for them. My mom was. I
Yep.
was selling them, so it was 100% margin. But
Wow.
I would sell them out of my locker for $1 a piece.
Wow.
Um,
And you just had
and
that instinct. Were you like shy about it? You just were like, nope, I got candy. You want it? Come buy it.
it was the latter. I know that I think I took advantage of this. Like, no, none of it. I was never like a trouble kid. Like, I
Yeah.
never got in trouble. Like, I was probably like the goody two shoes, and I think I took advantage of that, uh, of that brand.
Yeah.
Um, but still broke the rules in ways that the teachers didn't know. Maybe.
And so you knew what it felt like to like sell something and like
Oh, dude, yeah.
capture some value.
Yeah, because me and my brother were assembling computers, and like we needed, a new motherboard or a new like
Wow.
CPU, and we're like, I can't even go to my parents. Like, I know they can't afford it. Like, I can't even ask them. I can't even ask them for it. That's how um, because it was such a non-starter that I couldn't even ask for it.
Yeah.
Not because they didn't want to, but because I just felt bad. Um, like, I'm
Yeah.
not going to ask for something when I know they're stressed. And so we just we could fund it through stock tarts and sweet tarts.
And as you were, going through the rest of your journey, did you like, when did that urge come up again to like, when did you
High school?
apply that to,
They got bigger and bigger.
it got bigger and bigger.
So like high school, me and my buddy went around the neighborhood and put in flyers that we could fix your computer for you. And all the old people in the neighborhood just would call us. And when they would call, we'd just show up. We'd go to their computer and just reformat it and put an illegal copy of Windows XP on it, because that was the fastest path to having a clean, fast computer. and everybody would just, they would love it because their computer is blazing fast. And they still had all their files. And I think they felt bad for us little high schoolers. They would pay us more than what we, quoted them. It was like $20-$40 an hour, or $20 an hour, and they'd pay us like $100.
Wow.
And so, little by little, they got bigger, and then came Portfolio.
Okay. And then came Portfolio. Yeah. How did you come up with that idea?
So I was a teacher. I was a middle school teacher in Chicago, and technology is non-existent in the classroom. And I was like, I was a techie, so I was pulling into the classroom with a bunch of different SaaS products that I was just using all day, every day. And one of the things that I learned about my students was that if I knew their parents, they would not misbehave as much. And so our school had this policy where we had to go visit their house before the start of the school year. And so I went and did home visits with all my kids. And that was awesome because they knew that I knew their parents, but I didn't call them every day or anything like that. And so I always thought that if I could text my students' parents, just at the end of the day, how they did or what they were like, or if they were little shits or if they did great, then I knew the student would know, like, oh, Mr. Patel, like, he knows what's up, and my parents know what's up because they talk all the time. And so we built this this product where on the laptop I could pull up, like, just click on the student's name and then text their parents.
Oh, wow.
And it was powerful, man. It was like I'd pull it up on the computer screen and watch all the kids watch me doing it. And anytime someone did something great, I'd pull it up and tell their parents.
Wow.
And then, like,
that's dope.
The vibe of the classroom just completely shifted. And so that's what that product was. And we got a bunch of users, but we couldn't get anyone to pay for it. So we eventually killed it.
Selling to teachers didn't work.
No. But I would go up and down the East Coast, like driving to teachers and principals and just being like, hey, I'm in town. It was like Rhode Island. And we lived in New York at the time. I was like, hey, can I come by after school today? I'm in town. And it was like 9 a.m. And they're like, yeah, sure. Start driving to Rhode Island from New York.
Wow. And so that was like cold outbound on their email, or how did you get their contact info?
It was always some connection of a connection. So maybe they were a Teach for America connection. I was on Twitter while I was teaching. So maybe it was like a Twitter connection or intro from somebody. So it was always like trying to find a warm intro to a principal who could say, yeah, come by after school and do a little session with all of our teachers.
Oh, wow.
Yeah.
Wow. So you got distribution through the principals, showed up, pitched them, they got on board, and then you closed them right there?
I mean, it was easy to close because it was a free product.
Yeah.
but yeah, I'd show them. It was immediate. There's like immediate product market fit with the teachers, because I was a teacher and like I know it worked. And so when I like pulled up and I said, here's exactly what I do with my own kids, all the teachers immediately are like, oh yeah, we totally get it. Like that's amazing. And then it started to spread, within the school without teachers I had talked to. That was cool to see. But it still didn't, all that did was add server costs, and I didn't know anything about, VC at the time, or turns out I didn't even own any of this company that I was working on. That's another story. And I didn't even mind. And so,
so that was like
in hindsight, that was like
your first like, corporation created rodeo.
Yeah, exactly. And I hadn't even created the corporation. My friend had, who I met on Twitter, and he had bankrolled the whole thing, and he was paying me a salary and stuff. And so I was really thankful because he was paying me more than I was making as a teacher, which was like $36,000 a year. And so I was like, fuck yeah, let's do this. Like, this is great. But I didn't, in hindsight, I'm like, I should have probably owned half of it, a quarter, something.
Yep.
Wow. But yeah.
And so fast forward, then you learn to code. You have this idea for MakerSquare. Yep. You research, you are the user once again.
Yeah.
And so where people like you are looking for this.
Yeah.
And you updated the sticky post, and now were you incorporated yet, or?
No, we hadn't been incorporated yet. We weren't incorporated for a long time. Until we got, had to collect the first check, we weren't incorporated. But so, I think the vast majority of the students that we got in that first cohort were all from us hustling the meetup game in town. We'd go to like the Ruby on Rails meetup, the JavaScript meetup, the whatever meetup, any tech meetup we could find. We just go and sponsor it with pizza, or just ask them if we could say a couple words about what we're doing after or before. And that's really how the word got out, because it was a very local market.
Yeah.
Outside of the tech hubs, it was a very local market.
And so MakerSquare was one of the original coding boot camps. So you taught people how to code and get a job within 3 months. Yep.
Exactly.
And so you updated the Quora post. You got some leads there. You started sponsoring local meetups. How long was it until you had like a paying customer and like started doing the program?
Um, I think it was only like a couple of months before we had a paying customer.
Mm-hmm.
And it was an $8,000 upfront payment. So it was like a really high, you know, uh, high ticket product. Um,
And did you
I'm trying
build
to
the
think about,
curriculum yet? Like, how far
no, of
along
course
was
not.
how far along was MakerSquare when you started taking applications to when
Oh,
someone paid their
we were
tuition?
always, curriculum wise, we were always, 1 or 2 days ahead of the class.
Mm-hmm.
That's it. We were always working backwards from the end goal, which is a job. Um, but we had to be so nimble about how the class was going that it wasn't worth building more than we needed for like the next day or the next couple days.
Mm-hmm. Mm-hmm.
So from that perspective, we were always just like a day or two ahead of the students. Was that your question?
Yeah, just curious, sort of like what the product looked
Yeah.
like when you were selling it, like when someone bought it. Like, you didn't have to have the full curriculum, you didn't have to
Yeah.
have the full location. The
It was
school
all
wasn't.
trust.
It was all trust,
It was
you
all
built
trust. It was
trust
like,
through the meetup or through
yeah,
how.
through meetups, through interviewing them, meeting them in person, getting them to know, us, um, physically meeting up with them or doing video calls or having someone influential in the community like vouch for us,
Mm-hmm.
kind of just acknowledging that like, look, this is crazy. You don't know us, but like, yes, we're asking for tuition up front. And then it's like, do you want to, do you want to talk to the local uh, tech leader in town? Like, they know us too. Like, go talk to them. They'll vouch for us. Like, um, very much uh, a self-aware kind of, we know this is crazy and we're asking you to do it anyway and trust us.
Yep. Yeah, I mean it's crazy how much goes into just getting that first customer. It's like, it's not just like put up the landing page and like wait for the applications to roll in. It's like build
Yeah.
the social proof, build the reputation in the community, convince people to create an application,
Yep.
interview them, accept them. And then how many students were in your first batch?
30.
30. Wow. And how long
Yeah.
did it take to get those 30?
So the first cohort was June 13th, I want to say, or June 10th.
Mm-hmm.
And we probably started in earnest like March in terms of like interviewing people or
Mm-hmm.
like accepting applications. So March, April, May, 3 months.
So you spent 3 months getting social proof, building community, getting people to fill out the application, and then you had you launched the product 3 months
Yeah,
later with that's a ton of revenue for the launch.
totally. Yeah.
Wow.
And we didn't secure the space until the weekend before too.
So it was all just like happening.
It was happening like
And
every
then
day, every night.
did the process change for the next batch for how
Of
you got the
course.
customers? Okay.
Yeah, yeah, yeah. It got a lot easier. Then it became about building the systems and making them more efficient and tweaking things and um, stuff like that.
Wow. And
It was like
and
it went from like just pure hustle to some formula and optimizing of the funnel and stuff like that.
yeah. And so the first one was like purely word of mouth, purely going and
Mhm.
meeting people and getting them into the funnel. When did it change from that?
Um, I think like for the immediate next cohort, like it we were very trying to be ahead of the ball, so to say, on like we were the ICPs, and so we knew that we knew what would like convince us to purchase. And so once we had students, for example, we interviewed each of them, had a profile of them, took a picture, put it on the website, so people would know there's real people here and real backgrounds of where they came from, logos of where they came from, and we created a mentorship program with local engineers in the community, and then took their profiles and put it on the website and all this stuff. So like, none of this was true for the first cohort, but for the second cohort, it allowed us to just showcase what was happening, and how cool it was, that it made, you land on the website, you were going to convert. Like if you were an ICP, you were going to convert after that first cohort. But for the first cohort, even if you were the ICP, you might not convert because there's not much to go off of.
And how did you get people to come to the website for that second cohort?
I think we were so unsophisticated about that I don't even know.
Yeah.
I think we were still riding the meetup, Quora, answering Quora questions hustle. Like, I don't even think for a long time we pulled up our referring traffic to figure out, where it was coming from.
It was just like
we didn't learn about all these things till later. Yeah,
totally. And you were still like scaling, right? Like you still had real product market fit. And how much in revenue did you grow to before you got acquired?
I think we were at it was pretty fast because the first cohort was in June, and I'm pretty sure we sold in January or February of the following year. So it's 8 months or something.
Oh, wow. I didn't realize it was that fast.
I need to look. Yeah, it was fast. It was
fast.
It was a year or less.
Wow.
And I think we only grew to 1 point something in revenue.
Wow.
Trailing 12 months.
Totally bootstrapped.
Yeah, totally bootstrapped. Yep.
Wow. And then Tony was like, wow, they're killing it. We got to try to buy them.
No, it wasn't even Tony. It was more, dude, we fumbled the bag so hard. We had these, suits come in from publicly traded companies being like, hey, we'd like to do a partnership with you. And we're like, fuck off. We're not about to partner with the University of Phoenix. Now I know that means that we want to buy you. We didn't know that at the time. And so then they came to you, and you were smart.
We fumbled that too. Yeah.
I don't know, man.
For a while.
Yeah. So, the story, the short of the story was that we were approached by a bunch of different people, and they were all brands that we didn't give a shit about. And we knew the Hack Reactor guys from the White House stuff that they had put to, the White House had invited all of us, and we did a vibe check amongst all the founders to be like, who do we vibe with, who do we not? And Hack Reactor were guys that we, had shared values that felt like.
Yeah.
And so once we got a couple offers, we were like, none of this feels right. Why don't we go to let's ask if the guys that it would feel right to do it with would just match it or beat the offers. And so that's what we did. We went to Sean Drost and we're like, yo, we got this offer. You guys want to match it or beat it? And they were like, yes. And so we're like, all right, done. Let's do it.
Wow. And so was there it's crazy to think about because you always want to think about, I think as a founder, especially the first time, you're not, like you said, you weren't thinking about it selling, you didn't even know you could sell it.
Oh yeah.
And,
yeah, totally.
I know the market was super interested in coding boot camps back then. So I think it was really good to be a leader in the space at that time. Do you think there's revenue thresholds that people should know about when okay, someone's going to want to buy your company when you're at this scale?
I think there's a company I'm working on right now called Tesla MR. Shout out teslamr.com.
Let's go.
Where we train people to be MRI techs. Totally random. It's basically if the loosest approximation is coding boot camps for healthcare. Where with the greatest need first, which is MRI techs. And we're having these conversations right now with PE firms and whatnot. We're profitable also. We're at 1 point something million in revenue. And so now I'm getting better educated on what does the PE market look at? What do strategics look at? Even the words PE and strategic are things that we understand now. And I, at least if you're a profitable business, I think $1 million in EBITDA is kind of the first hurdle before someone takes you seriously, because that implies you're at like anywhere from 3 million to 10 million in revenue. Assume 30% to 10 to 30% net margin. And that implies that you have enough product market fit that there's an opportunity to scale it. And then people become interested. So if you whittle it all the way down, it's like $1 million in EBITDA, if you're a profitable business, is kind of like the first hurdle to cross.
Oh, that's really interesting. That's a really good point. It indicates that you have product market fit and that you could probably scale.
Yeah.
Wow. Because you're not spending a bunch of money to get customers.
Yeah.
You're not losing a bunch of money getting customers, getting that,
Yep.
Oh, wow. I like that.
And you're still pre-scale, because $1 million in EBITDA is not scaled. And so it implies that there's some leverage in the business that a PE could buy it, put some money into it, and then get a 2 to 5x return just by, pumping dollars into scaling it.
Yeah. Wow. Okay. So back to MakerSquare, you sell it to Hack Reactor, and you're at a little between 1 and 2 million in sales. You get a good deal, and then you become CEO of Hack Reactor. And like, what scale of revenue are you at now, where you're thinking about as CEO, like growing the business?
I think we took the MakerSquare brand from like $1 million or 2 to almost like 8 million, I want to say, in like a year. Under Hack Reactor. And so it was like really fast growth right away inside of Hack Reactor.
And what were some of the levers there? Because that's like
all
super
new locations.
fast. I mean, that's really fast.
It's really fast, yeah.
$1 million in less than a year is fast. And then 8 million in 1 year is like crazy fast.
Yeah, Hack Reactor had a extremely strong top of funnel going for it. And so there was an extreme, and they were much more sophisticated about things than we were. They understood funnels. They understood, it wasn't their first rodeo in terms of businesses, let's call it. It was clear. And so, they had a very sophisticated at the time. Now I know it to be, level 1 on sophistication out of 5. But at the time I was like, damn, you guys got your shit together.
Wow. And was that like SEO, or like what does that look like?
I think they just started doing paid ads. And, when you have product market fit organically, the first time you turn on paid ads, you're going to get a massive freaking boost, because you could have been doing it the whole time. You just weren't. And so now all of a sudden, even just branded ads on Google will give you a huge boost the first time you turn it on, if and only if you have product market fit and you have organic traction already. And that's what, Hack Reactor had that. And so Hack Reactor had an extremely strong top of funnel from people all over the country. And so when we would say, let's open an LA location for MakerSquare, or a SF location, or a New York location, there was strong demand already for those seats. And so that, the operations of scaling a coding school, once you've done it for a couple of locations, you understand it, pretty effectively.
Wow.
I mean, like, it's seared in my brain. I actually know that a 6 foot by 6 foot space on the ground yields 4 students. Like, that's what you need for 4 students.
Wow. So you guys were dialed in, really dialed in.
Well, yeah, because we had built the Austin location, and then we had a second Austin location that we opened up, and then we had a third location in San Francisco that we had opened up. And so like we knew the operations of how to keep up with demand.
Wow. And okay, so you scale to 8, and so part of that is Google Ads, part of that is just really strong product market fit. Any other growth tactics that stood out to you?
The meetup game kept working. So in LA, for example, we had started, we just taught people programming. We like created our own meetup to teach people programming. And that was a great, strong top of funnel. I think it was more helpful for conversion than acquisition.
Oh, interesting.
Because it's the first, people see you teaching and they get a vibe like a feel of like the space and the instructor and stuff, and that just like moves the conversion needle so heavily.
Wow.
And maybe there's a lesson in here of like kind of go where there's tailwinds, but at least on like the acquisition side of things, everybody and their mom at the time were talking about learning to code. And
Yeah.
so we had a really strong, extreme top of funnel, like not inside of our funnel. I'm just saying as an industry, there was like a really strong top of funnel in terms of awareness that was happening for free. We didn't have to do any of it. And so a lot of the focus ended up being on conversion.
Yeah, that's really interesting. That's cool.
Yeah.
And so then you're crushing it at Hack Reactor, and then you get acquired again. How did that conversation differ from when you sold MakerSquare?
How did it differ? So or
how did your approach differ, I would say?
Yeah. Well, we had used an iBanker, and for that transaction. And so, iBankers, they've got this thing down to a science. Like they like, you make a presentation, like a sim, you've got your target list, whether someone's a PE buyer or potential strategic or family office or what. And you literally go and just do pitches. And it's like its own top of funnel to, conversion exercise. And ultimately we felt like Galvanize, who had like these physical office locations, were going to be the best place to scale out further. And being able to put the strong Hack Reactor content and curriculum into physical location that Galvanize already had was going to be the best chance for further growth. Out of the other options that were on the table for who would buy Hack Reactor at the time. And so that was more like Hack Reactor was a strong asset. It was profitable. It had scaled. And so there's a lot of professional interest in the company. And then we got to choose who's going to be the best home for it long term. And we thought that was going to be Galvanize.
And how predictable was the growth by the time you sold Hack Reactor? So like kind of comparing back to, okay, launching a couple of these things work. We filled the class. Okay, we're going to do more meetups. That's how we're going to fill more classes. Then you grow, then you 8X, using some paid ads, more community building. How predictable from that point was the business in terms of like, if you needed, did you raise money? Did you need capital? How did you think about growing it?
So Hack Reactor didn't, because it was profitable, but and so at the time, the industry had matured enough where when we were going to go into a location, we had to put a little bit more capital to work before we could get a return on it. Like if we were going to go and open a location in Seattle, for example, we would have to, we knew it was going to cost us, $250,000 or maybe $250,000 to like go attack that market before it starts to generate its own profit. And unless of course you had the space. So if you have the space, all of a sudden it's it goes from 250 to 500,000 down to like 50,000 of capital needed. And so that's why like Galvanize was really attractive, because they took a lot of the startup capital cost of going to a new location off the table.
Wow. And what scale of revenue were you when you sold Hack Reactor?
I think it was like, I don't remember, 20 something, I want to say.
Wow. Okay. So
in that ballpark.
So you sell when you're at 20 something in revenue a year. Now your parent company is Galvanize.
Yeah.
You merge, you integrate into the company, and now you're CEO again of Galvanize.
Yeah, that was an interesting story. I tried to leave, and that's how I became CEO. And then learned the true reason that the board wanted to buy Hack Reactor. I didn't learn it until I was leaving, and it frustrated me so much. and the clarity would have been really helpful. The short of it is that, I think the Galvanize board actually wanted Hack Reactor to come in and be the education arm, but never made that clear to anybody. And so there's always this confusing kind of push and pull between, is it going to be the Hack Reactor brand or the Galvanize brand when we go to market for a particular product? And is, to anyone on the ground, like any of the instructors, anyone that was like kind of in it, it was kind of clear what to do. Galvanize had an extremely strong data science brand, and Hack Reactor an extremely strong software engineering brand. That's what should have gotten to market with. But it wasn't clear top down. It's part of the reason that one of the reasons that I was interested in leaving, because I was like, I can't deal with this kind of indecision. And as I was leaving, the board was like, whoa, no, please don't do that. Like, this is what we intended on you guys. And I was like, why the hell didn't you make that clear to begin with? And so anyway, I tried to leave, and the board said, no, please stay and turn this thing around. And ultimately I just said, all right, one last go of this. And it never feels good to leave something in a place that you don't feel good about. And I was leaving Galvanize because I didn't feel good about where it was headed. And so part of the reason was just like, fine, let's turn it around. And I want to leave this in a good spot before I go on to do something else.
Wow.
And so, yeah. So
how long between that and then selling for 165 million? How long?
Yeah.
That
I think journey? It was like 6 months.
Oh, wow.
Which is unbelievable.
Wow.
Yeah, we were so like, I had committed to it. We actually raised capital to keep Galvanize alive. We completed that, and we're like in the midst of turning the business around, like from unprofitable to profitable. I think it was like, we're like kind of on track. K-12 came by and said, hey, we want an asset like Galvanize. We're trying to expand beyond just kindergarten through 12th grade, blah, blah, blah. And I actually, in my first email to them, said, we're not the right fit for you. Like, we're in the middle of a turnaround. I know how this works. You're not going to want to buy us once we do diligence. And so let's save our time. Like, let's not do this. And I think that made it even more attractive for them. Because I think I ended that email with like, let's talk again in 3 years. We're going to look great. And I just like genuinely meant it. And in hindsight, to them, that was like, oh my God, wonderful. Like, we can buy an asset, that doesn't look perfect today. And in 3 years, they're going to have it all fixed, and we're going to reap the rewards of that. I think I'm speculating here, but I think that's, why it made it even more attractive of a company to buy. And so, their CEO responded and said, you know what, we're still really interested. And I said, trust me, you're not interested.
Wow.
I've got the email receipts to back this up.
Wow.
Like word for word, being like, you don't want us right now. Trust me. And then I said, here are the skeletons here's all the skeletons, just to be like, please, let's not spend any more time here, because I know you're not gonna want this. And again, in hindsight, that was brilliant, because I said everything negative about the business right up front. I hadn't even met them in person yet, and I gave them everything wrong about the business that we were gonna go fix. And again, I think that set things up really well, and then I said, look, in order to even think about buying this, it's going to have to be an all cash deal. And it's going to have to be north of like 150 million or something, just because I knew, what the latest investors had invested in at, and what I'd be able to convince them to sell at, and what like the early investors would need in order to authorize a sale on the board. And so the ballpark was basically like, look, in order for most people to feel like they're winning, you're going to have to do it all cash at north of 150 million or something. And here's all the skeletons in our closet. And so if I were you, I'd walk away instantly and therefore like, see you later. And they replied back with like, that's not crazy. We can do something in that ballpark on those terms, blah, blah, blah. We'd still like to take a look.
Wow.
And then I was like, oh shit, really? All right, fine. Like I got nothing to hide.
Wow.
And then I think as we started doing diligence, they were like, this isn't as bad as you said it was. And I was like, great. And that ultimately led to them doing the deal. And then a giant unfortunate situation was like a month after they closed the deal and funded it, COVID, came and wrecked the co-working space market and ultimately the coding bootcamp market. So unfortunately it didn't work out for them. That the bet didn't pay off. But I still think it was a good bet.
Wow, that's pretty incredible. So starting on Quora, getting one user and selling, getting to $1 million in revenue, bootstrapping, selling, going to 8, becoming CEO of that company, selling, becoming CEO again, and and turning it around. I mean, what scale was Galvanize at when you sold? Like, as CEO, what were you responsible for? Like, in terms of like, like how many people, how many students, how many?
I think we were at 400 and something employees. I think we were like pushing 50 million in revenue across co-working, data science, software engineering, and enterprise and government. But we had not turned it around. I almost like it kind of still feels like it's unfinished work because COVID came and messed things up in such a way that it never, kind of, the coding bootcamp space is not the same as it was pre-COVID. And so it still feels like unfinished business.
Wow. Do you think you want to do it again?
I've got 2 kids and hopefully more on the way. I don't think so.
Yeah. Oh man. I mean, that's such a tough...
dude, if I was 20 something right now with AI, like I would totally do it. And Austin at Bloomtech, Gauntlet, the magician.
They just launched Gauntlet.
Yeah, that guy, I have so much respect for him. But and he's got a ton of kids. I don't know how he does it. Like and so maybe I'm just like not built the same. As they say, but
you are built different. I
don't think I could do it again.
You're a legend. You're a legend, man. So you sold. Okay, so you sell for 165 million, and you do the turnaround. COVID hits. COVID really changed everything.
Yeah. It did.
COVID changed everything. Crypto changed everything. And you didn't want to retire. You said, I let me keep helping companies. So now you're on the board of a bunch of companies. You started investing in a bunch of companies. You started more companies yourself. What are your thoughts on, like, as you approach all these things, like, you're going back to that 0 to 1 phase a lot of times. And do you want to share any recent experiences going from 0 to 1 and how that's changed since your very first launch on Quora?
Yeah, totally. I think the founding team has to have someone on it that is the ICP or like very intimately familiar with the ideal customer. And so, for example, for Tesla MR, the 0 to 1 story is that I had nothing to do with MR machines. But one of my co-founders was selling MR machines. By the way, I started this company with 2 guys in their 60s. That's a whole other story. But
that's cool.
They were selling MRI machines and they were talking to these customers saying, hey, we want to buy your machine, but we don't have people to staff it. And so they knew the customer really well. And so, and they were the reasons that we got our initial customers there. And then for Macro, one of my other co-founders had been in crypto building things for many years and knew the ideal customer profile really well. Like he knew the founders and CTOs of different blockchains and different DeFi protocols and applications that face this problem of not having good security or not having good talent. And so he was the one that when it was in charge of the go-to-market. So I just think, someone on the founding team's got to have, got to know the customer extremely well, either by being the customer or having sold to the customer before. I wouldn't, there's little baby geniuses out there in the world, but I wouldn't start a company without knowing that me or one of my co-founders knew the customer very well.
Yeah, that's really interesting, because then it's almost like the go-to-market is different depending on who's the ICP and where they are when you're trying to sell to them, and and how to get their attention to try your offering.
Yeah, absolutely. So I don't think there's a one size fits all at all until you get to much more later in terms of scale. But at the product market fit level, there's no one size fits all at all.
There's no one size fits all. It's just brute force.
Yeah.
Does it ever not become brute force? Like, it's brute force in the beginning. I think this is how you know you've got the right founding team. If it doesn't feel like brute force to someone on the founding team, like in coding bootcamp plan, it didn't feel like brute force because we were the customers and we were like, we know what we want. We know what we would want. Let's just go build that. And for Tesla MR, one of my co-founders, like, well, I know what all my customers want. I've known these people for 10 plus years. Like, I know that if we offer them MRI techs, or if we start an MRI tech school, I know that there's people on the other end that want to hire them. And for blockchain security, it's very clear. Like, David, or my co-founder there, he knew, like, hey, if I have this product, these customers are definitely going to want to buy it. So the motions and the execution is kind of brute force, but not the question of whether or not the customer even wants it. So I think if it starts to feel like you don't know the customer well, I'd stop working on it. Yeah.
Like, I would go find a co-founder that, for whom it feels like it's not brute force.
Right. And so what are you most excited about today in the market? What trends are getting your attention right now?
I mean, the classic one, AI.
Yeah.
Yeah. And then the other one, crypto, which I've spent the last, 5 years in. And in some cases, the intersection, but maybe not really yet. But both those independently are really interesting right now.
Yeah, it seems like they're both. Operator just came out. That's complete game changer for everybody. It's been under the hood, available via API, sort of like how ChatGPT was before ChatGPT came out. But it's once there's the consumer facing, this is how it works, and it unlocks everybody's ideas. Oh, how can I implement that in my stack with one API?
But what's
call.
Crazy, man? Outside of our little tech bubble, AI is still seen as oh, haha, ChatGPT sucks. I've used it once, back when it was ChatGPT 3.5 or something, where, yeah, sure, it was a little shitty. But it's so wild to me that there's still this gigantic disconnect between, I don't know what even to call it, the average, person at a company trying to solve a problem, them still not thinking AI is the way to help them solve whatever the problem they're having.
Wow. So maybe we're not even there yet. We're not even close, but it seems like it's got some crazy, crazy momentum.
Yeah, totally.
And then crypto, the president is launching meme coins. Is that a thing?
Wild.
Are meme coins, are shit coins here to stay?
Shit coins are here to stay, my friend. And
is there going to be
I
new?
I think, and I think it's in the era of I was reading some stuff about early stock market, the literal Wild West, not just figuratively, but the actual, proliferation of corporations in America. And there were shitcoins back then. People were peddling, shitty companies with shitty cap tables and swindling people. So like, I think we're in that era for, on-chain tokenized anything, like tokenized companies, tokenized ideas, or anything like that. We're in that early shitcoin stage, but it's not going anywhere. It's so clear that it's not.
And is it that analogy to the original stock exchange, like that feels like this could go there. Like this is like on-chain stock market, like, should all companies or like ICOs, right? ICOs could come back. Like this is a way
sure.
to raise money for your company. Like
meme coins are the new ICOs. In fact, ICOs were, in my opinion, the best thing ever. Like everything should go back to ICOs, and because it's so fair, it's so transparent, everybody gets to participate, everyone knows the risks and doesn't. Like it is the most democratic kind of implementation of a free market. And it's like, I don't know. I think it's such a shame that regulators killed ICOs. But it certainly feels like it's coming back with Trump launching his meme coin.
And is this sort of like, because it's almost like you can launch a meme coin in a couple of like keystrokes right now, right? Like you can go to Pump
did one like 2 days ago. Yeah.
Okay, like can you share that? How do you launch a meme coin, and how does that relate to? It is an ICO, right? It's an ICO for your coin. So how does that relate to how it was like in 2018, 2019?
I mean, man, there's so much here.
You could also just tell me to fuck off and we can talk about it later. But
no, it's wonderful.
Share, it's really
awesome.
interesting.
I mean, you could go launch a token. We could do the next 5 minutes. You need some, on Pump.fun, you need some Solana in your wallet, and that's it. Maybe you need like, I don't know, half a Sol, which is like $100. And it'll do everything else for you. It'll create a token with like, I think it's like 1 billion token supply, fully circulating, and just launch it. And then people can, find it and start to buy it or sell it. And now you've created a market for your token.
Wow.
And ultimately it comes down to like, it's so flexible. You could say like, hey, I'm launching this token, and each token represents a share in my company. Now that has a totally different meaning than Trump launching a meme coin and saying, hey, this is the meme, I'm launching a meme coin. It's the same exact methodology and underlying technology and structure, but the meaning is different based on whatever the person wants to do with it.
Wow. And how do you paper that? You paper that on the blockchain. You write it into the
Here's the way to you bypass all the papering, to be honest. And I don't even because papering is just ownership rights enforced by the legal system, right? But on the blockchain, if you own the token, you own the token, and so the ownership, there's no concept of needing ownership rights because it's all enforced by the code. And so like if you have a token of something, someone can't take it away from you, and someone can't make a duplicate of it, which is all the things that the legal system tries to protect with actual company shares, right? And so, I actually think that the stock market is going to become tokenized at some point because it's also a more efficient, cheaper way of transacting shares between two parties. And so it's not going to look like Pump.fun, or maybe it's not even going to, people aren't going to even know that it's happening on the back end, but all the settlement of these shares on the back end, I predict is going to happen on chain.
And this is what one of your companies does, is it audits these sort of blockchains and ensures that they are doing what they say they're going to do. Like how does
it's not work? Necessarily. I guess in some ways they're doing what they say they're going to do, but it's more so just a technical implementation. We look at what they want to do and what they say they want to do, and we make sure that the code that they wrote does what they want it to do. And we
So
try
like,
to say
wow.
like, if
It's like
there's
a
a nefarious
unit
actor,
testing kind of thing.
yeah, exactly. We're the shitty way of describing what we do is we're like QA. We're QAing people's code. The really sexy way of describing what we do is we're like trying to hack their code to make sure other people don't hack it once it's live.
Wow.
And so when we do hack it and we do find that, hey, you wrote this code in this way that actually someone can have access to all the tokens, you probably don't want that. Here's how you can fix it. And then they're like, oh my God, this is wonderful. Thank you so much.
Wow. So in a world where today we have, angel investors, VC funds, talking about like funding for startups, and you have like platforms like WeFunder for like Reg CF crowdfunding. Now there's like meme coins, which it's like, it's not normalized yet at all, right? It's not like every new startup does an allocation of their round to an ICO, but is that a future that should happen?
100. I mean, I actually, I'm like itching to build a company that I can have all of the equity ownership on chain. Like there's already on chain applications, like projects that they generate fees on chain, and then those fees go directly to token holders on chain. And so you hold a token of something and you're getting a 10% dividend of the revenue generated by the company.
And how do you enforce that, right? Like if someone creates
in the code,
but let's say, if because the company itself has to be on the blockchain. So if you have like a Delaware C Corp and then you say, hey, 10% of our shares are being allocated to this ICO, each token represents one share in this 10% allocation, and holders are going to get 10% of the ownership, equity ownership. So they're on the cap table. It's this. How is that enforced? Like if the company exits, how does the blockchain enforce that waterfall payment to the token holders? Like, is it?
Yeah,
there still has to be paper there, right?
Absolutely. What you're describing right now doesn't really exist. What I'm trying to say is we can build Coinbase on chain, and the revenue that we collect actually happens on chain from users.
Oh, I see.
And so if the revenue is collected on chain, then we can write code that literally says, hey, every week, every month, every quarter, whatever, take 10% of the revenue and redistribute it to these token holders, all that's happening on chain. And so therefore, if you hold the token, you know that you're going to get that, rev share. Now you can take one layer abstracted away. You could say, you know what, maybe you don't write it in the code that 10% of all revenue is going to go to token holders. Maybe you just say, hey, we are going to authorize 10% of revenue or profits back to token holders. Now people understand and they hold it. They might go purchase that token with that expectation. And just like in today's, stock market or any company, if you change the expectation, then you can expect the token holders to change their behavior. And so if you say instead of 10% of all profits, now we're just going to share 5%, okay, then some token holders are going to sell, and there's a free market of who's selling and buying. And so maybe your token price comes down. And you can say, you know what, now we've changed it to 30% of all revenue is going to go to token holders. Now your token price is going to go up. It's the same way that it operates, at the stock market level, where if a company does a dividend and increases their dividend, more people want their shares, the share price goes up. Or if a company they've generated a lot of profit and they start to do buybacks, buybacks help increase the share price because you've got more competition for those shares. Same way on chain. There's so many projects that will do something called buyback and burns, where they take the profit they've generated on chain, buy back their own token on the open market, and signal to token holders that, oh, they're going to do future buybacks. And so I actually want to hold this token. Anyway, all of what I just described is actually happening on chain right now on the billions of dollars scale. Like that's actually happening right now. what you described of like, hey, I've got a C Corp and my C Corp says we're going to take 10% and buy our token. That's not happening yet. But I think Trump launching a meme coin opens the door to doing that also.
Wow. And so it sounds like to really close the loop on shareholder rights or token holder rights and keeping it all on the blockchain, there needs to exist a framework to incorporate on the blockchain, and the business needs to be on the blockchain to really enforce
that's what
all this.
Pump.Fun is.
Got it.
Pump.Fun is incorporating a cap table. Like when you launch a token, I need to write a blog post on this because I have learned so much about how C Corps work because I know how tokens work. And this whole time, these tokens were basically set up like C Corp shares, with like buybacks and burns and like dilution and like creating new shares and dividends and like all of this. Like I learned on the blockchain first. And now I'm like, oh my God, that's how C Corps work this whole time. And so like Pump.Fun is literally creating new cap tables with every token launch. Wow. That's what's happening. You've got 1 billion tokens or 1 billion shares, and you can let them trade freely on the open market. So I don't know, man. There's like the two didn't merge in the past, I would say 12 years because of the regulatory environment.
And now there's going to be a lot more like blockchain friendly regulation, right? It's like actively supposedly going to be happening. So this is going to change everything.
I actually think so. And there's probably not a single more convincing or a single more supportive thing that they could have done than to launch a meme coin on US soil. The thing that all US crypto founders have been scared of is launching a coin on US soil. So they have all these workarounds with Cayman entities.
So they just
whatnot.
set the new precedent, and sort of it was like a signal like, hey, this is okay. This is safe.
I don't think they didn't even say it intentionally, but that's what the outcome is. Like as soon as I saw that, I was like, oh my God, we had thought about launching a token and we got scared off by it. But wait a minute, the fucking president just did it? All right, fine. Like, let me take the risk.
Right.
And so I don't have a on-chain business to do that through now, but I know that if I was starting an on-chain business right now, I'd send it for sure. I would do it.
Wow. Fascinating, Harsh. Thank you so much for going down that deep dive into crypto, because I think a lot of people don't get yet how powerful it is. It's not just a meme. It's not a joke. It's probably the future of business.
I mean, it could be if you want it to be. And I saw a graphic where Cursor went 0 to 100 million in revenue in a year. And it was like, look, Cursor's the fastest company ever done it. Pump.Fun is generating actual fucking revenue, and they're at like almost $1 billion run rate in less than a year. Like
that's insane.
That blows every company out of the water. But people just like to shit on shitcoins and crypto in general. But go talk to the Pump.Fun founders. I'm sure their dollars are the same as your dollars when you're trying to build a company.
This is amazing, man. This is amazing. It feels like the beginning of crypto.
It really does.
I brought my first Ethereum with you back in the day. This feels like this feels like that again. Like it's the beginning of meme coins, of like the future of crypto. So yeah, thanks.
Although I think
Harsh.
when we bought it together, we bought it at the top of the market. So hopefully,
but it was the top. It was the top of like 2017 market. So I think I'm still holding.
Me too. So yeah, we're doing fine on that.
Awesome, man. Well, thank you so much for coming on. This was a lot of fun. I learned a lot. I think our listeners are going to get a lot from this. So thank you, and we'll see you on the next one.
You got it. All right, later, brother.
All right, later, brother.